This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, May 5, 2026, and this is the New York session. Now, let's get into it. The S&P 500 closed lower on Tuesday, pressured by a broad sell-off in industrials and materials, while the Nasdaq held up slightly amid mixed tech earnings. Let's break down the numbers.
The S&P 500 closed at 718.01, down 0.37%. The Nasdaq 100 traded at 672.88, down 0.19%. The Dow Jones fell 1.10% to 489.56. Among the top gainers, Bain surged 9,900%. Capped jumped 3,743.75%, and V climbed 3,483.23%. The biggest losers were F5WS, down 99.8%, IPOFWS, down 99.77%, and SBTKW, down 99.6%. Sector rotation saw energy leading with a positive 0.92%, while materials dropped 0.13%, and industrials fell 1.14%. The market remains in a cautious mood ahead of the FOMC decision.
Now, let's look at the corporate news.
AMD beat Q1 earnings estimates with revenue of $10.25 billion and a strong Q2 outlook. SMCI also beat Q3 profit estimates but missed on revenue. Core Scientific posted disappointing Q4 results, and a stablecoin proposal faced criticism from U.S. banks. SEC filings today included 8Ks from ITT, IPG Photonics, Terns Pharmaceuticals, Ellington Financial, and Myriad Genetics. Upcoming dividend ex-dates include IG, LQDH, NVDW, RDFI, and LDRH, all with ex-dates on May 4.
Moving to the macroeconomic data. The Fed funds rate stands at 3.64%, with the 2-year Treasury at 3.95% and the 10-year at 4.45%. The yield curve remains normal, with a spread of 50 basis points. Inflation remains above target at 3.29% year-over-year, creating hawkish pressure. The U.S. real GDP growth was 1.99% annualized. Tomorrow's key events include the FOMC rate decision at 1900 UTC, the ADP employment report, and the non-farm payrolls report. The market is watching for signals on the Fed's next move. Let's check the risk signals.
Risk Desk reports no elevated signals today. The VIX is at 16.99, up 0.10 from yesterday. No major credit warnings or geopolitical disruptions to note.
Now let's look ahead.
Watch the FOMC decision tomorrow for clarity on the Fed's rate path. Keep an eye on the yield curve and inflation data for broader market implications. The S&P 500 and Nasdaq remain key indicators of tech and overall market sentiment. The most important takeaway: the market is on edge ahead of the Fed's decision, with volatility likely to persist.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.